When the Federal Reserve eventually cuts their Fed funds rate, how long will it take before mortgage rates start to come down, before the housing market starts to be affected by their decision to loosen their monetary policy? Now, we're in this video, we're going to go over an article where some experts give their opinion about how long they think it will take before the Fed rate cut affects the overall housing market. But in my opinion, I disagree with what the experts are saying. The experts say that it might happen immediately as soon as they cut the rate, or there might be some lag time after they cut their rate before we see mortgage rates fall. I actually think it will happen before the Federal Reserve cuts their rates. And this is because, from what I've seen, the market tries to jump the Fed's decision. They try to get ahead of it. They try to learn what the Federal Reserve is going to do and then hedge their bets based on that. So if the Federal Reserve gives any indication that they will be cutting their rates at the end of this year, I know they've started to give some indication that they might do that, but once they for sure lock in that they're going to cut their rates by 25 basis points in, say, October, then the market is going to bake that in and they're going to start betting on the Federal Reserve cutting their rates before the Fed does anything. But let's get right into this video. Let's get into this article here. Before we do, my name is Liam O'Reilly. I'm a realtor with Jerry Riley Real Estate here in Vermont. If you have any real estate needs, whether in Vermont or anywhere else in the country, reach out to me directly. All my contact information is in the description, and I'd be happy to help. So this article coming out of CBS News, how a 2024 Fed rate cut will affect mortgages according to experts. So basically, what people are thinking is that the Federal Reserve is going to cut rates by maybe October by 25 basis points, and then maybe another 25 basis points in December. That's what this highlighted section is saying. There's a high probability for one 25 basis point rate cut to occur in October, Jonathan says, and a chance for another 25 basis point rate cut in December. And so that's kind of what people are thinking, or maybe a 25 basis point rate cut at some point between now and the end of 2024. So we'll see. And then they think that this could drive mortgage rates down by 0.5% or 0.75%. I actually think it could be more than that. I think we can see mortgage rates drop even further depending on what the Fed's sentiment is. But then we go down to how long they think it'll take to impact the mortgage market and the housing market. They say the potential rate cut would be dramatic and immediate as the market repositions itself based on new Fed policy and guidance. Other experts say there can be a lag between changes in the federal funds rate and the impact on mortgage rates. So, the views are kind of mixed between the experts here, where they think once the Federal Reserve cuts rates, there might be a lag, it might be immediate, and who knows, it could cause more. One 25 basis point cut from the Federal Reserve could cause mortgage rates to drop by 0.5% or 0.75% as they prepare for the tightening cycle. But as I mentioned in the beginning of this video, I think it's what the Federal Reserve predicts that will hold more weight into where mortgage rates go and where the housing market goes, as opposed to the actual action of cutting their rate. So before the Federal Reserve does anything, people are betting, and you see this in the bond market, right? The yield curve has been inverted for a long time, meaning that you can get a better yield on a 2-year treasury than you could on a 10-year US treasury right now. And this is because people in the bond market are betting that the Federal Reserve is going to have to cut their rates sooner than they expect due to a recession of some sorts. Essentially, the big money out there is saying that the economy is not as strong as the Federal Reserve thinks, and so they're putting their money into a 10-year treasury, which is a lower yield than the 2-year treasury is now, but at least they can hold on to that 10-year note for a long period of time, or sell it as yields drop and the prices of those bonds rise. And so we're seeing that right now, where people are predicting, because of this yield curve inversion, the market is predicting a recession is coming, that the Federal Reserve is going to drop their rates faster than expected. And the market's been predicting that for a while now. So we saw this too in COVID, when the Federal Reserve said that they were going to start purchasing corporate bonds to help corporations during the lockdown. We saw the public sector and the market try to front run the Federal Reserve, buy corporate bonds, because they knew there was going to be such a high demand for corporate bonds if the Federal Reserve was buying those bonds. But what happened instead, the Federal Reserve, they didn't even need to buy any of those bonds because the public did it for them. So if the Federal Reserve says that they're going to start easing their monetary policies, that they're going to cut their mortgage rate, or not their mortgage rates, their Fed funds rates, then I think we're going to see that immediately reflected in the mortgage market and in the bond market as people try to front run it. They're going to try to lock in their higher interest rates now before this easing cycle starts, before the Federal Reserve consistently starts cutting rates. Now, depending on what the Federal Reserve says will depend on how far mortgage rates fall. If the Federal Reserve says that they're going to drop their rates significantly or keep cutting their rates for the foreseeable future, then we will see mortgage rates drop significantly even before the first Federal Reserve rate cut takes place. Now, if they are still uncertain and they say that we're going to drop by 25 basis points and assess the situation, see how things are, then I think we're likely to see mortgage rates tick down slightly even before the Federal Reserve cuts a rate at all. The mortgage rates will come down a little bit and they will kind of assess to see what the Fed says, see what happens in the economy, and again, try to front run the Fed, either buying more mortgages, buying more bonds to bring mortgage rates down, or not holding off by not buying their mortgage-backed securities, not buying bonds, because they think the Federal Reserve is going to either bring rates back up or maintain them at their current level. So that's what I think is going to happen. Really, the most important thing to watch for is to listen to people talking about what the Federal Reserve are saying. Watch their meetings, or watch this channel and listen to my interpretation of the Federal Reserve and what they're saying, so we know how the market is going to react to those issues. Of course, news outside of the Federal Reserve, like bank failures or recession indicators, could be a sign that the Federal Reserve will cut rates and could be a reason for the market to jump in, purchase mortgage-backed securities, which will bring mortgage rates down. We'll be watching those on this channel as well. But there's the main takeaway of this video is the actual cut of the rate that the Federal Reserve does won't impact mortgage rates directly. It will likely happen before, as people try to front run the Fed's decision. And of course, once mortgage rates drop, it's going to take time before buyers realize mortgage rates are lower and start to flood back into the housing market as they realize they can purchase more with the same dollar. So anyway, thank you guys so much for watching. I hope you got something out of this video. Leave me a comment. I love hearing what you think, and I'll see you guys in the next one.